Hey, what's going on, traders? Top Forex G here. Before you get into the video, I want to share with you guys a simple but yet entertaining short story. I was in a store in a nearby town one evening. I wanted to find out when the store opened the next morning. So listen closely to what I'm about to say, because this is what is going to make the whole essence or the whole meaning in the story. I wanted to know when the store opened the next morning. I stopped a teenager. It was a she, and she was one of the staff, because I noticed from the badge, right? So I asked her, "What are your hours?" Then she replied, listen to this reply here, because it's funny to me. I don't know if it'll be to you, but she replied, "Now, uh, it is 6 to 9 because I'm in school. But next month, it will be full time." Do you get the essence of the story here? Next month will be full time. You feel me? And I was like, shit, you know what it is, you know what time it is. I just went on to get the tickets, and game is game. Game is game. So the purpose of that simple story is aren't you guys to help me and formulate titles for it, yeah? Just in the comment section below, just go ahead, get a title from that short story there, and type it down there, yeah. Help me get a title for that story. But anyways, in this video today, I'm gonna take you through a step-by-step outline on liquidity runs. I'm going to take you guys a step-by-step outline on what liquidity is, when we should use liquidity, how we can use liquidity to our advantage. In fact, I think if you can do this in the next 3 to 5 days and implement every single thing correctly and carefully that I'm going to show you here, you're not going to be the same. You will be profitable and consistent. But again, I have to warn you, if you skip any part of this video or these concepts, it's going to be the reason as to why you don't achieve your goals. It's going to be the reason as to why you're not profitable or consistent. So please make sure to implement everything I'm going to be sharing with you guys. If you want to be consistent in these markets, make sure you're subscribed. In addition to that, I have a free Telegram channel that you guys can go and see crucial updates 100% free. I post almost every day. Thank you. What is liquidity? Liquidity refers to the degree to which a market asset or security can be quickly bought or sold in the market without affecting the asset's price dramatically. When you look at price, it doesn't matter what time frame you're looking at a time is relevant for right now. The specifics about price action as it relates to liquidity, we as price action traders, we are looking specifically for reference points where we can hone in on where there is a high probability of liquidity resting in the marketplace. Now, liquidity as it relates to ICT concepts, it relates to buy orders and sell orders. It's as simple as that. When we have a swing in the marketplace, as we note here, the market trades lower. Our understanding is someone went short. This position will be a net positive or profitable. As the market moves lower, as the market turns around, if those same positions were still held, their open profits will be eroding at some point, at this point where right now, right here, they will be at a losing position. Our understanding is if there's a short position, all traders that are being bearish in the marketplace, if they have positioned a profitable trade here and moved lower, their stop loss order will be resting right above this high. Or generally, many times just right at which high the market tends to find an interest in going back to where that large body of interest, or what we call liquidity in the marketplace,
As the market
it will
finds
be by
the law down here,
liquidities.
as the market rises away, our understanding is that there's gonna be buyers, right? That have positions that are net positive or profitable. As it trades higher, at some point when the market starts to trade back down lower, back into the area in which the buy orders would have originated from, their open profits would be eroding until eventually moving into this area here. It will be at a net loss position. So when we look at price, the idea is we are not looking for specific patterns for the sake of patterns. We are looking at where existing orders would reside. So essentially, what you do is you're targeting areas at which the market has already seen a willingness to go higher or lower in case. We see a swing high and the market moves lower. We view that as smart money traders or as market makers perspective, right? We know there's going to be buy orders, buy stop, or buy liquidity above that high. When you look at the lows, when the market moves away from the lows, we see that as sell liquidity. So identifying both of these positions on both sides of the market, we are going to teach a concept called open float. While that's not going to be covered in this specific tutorial or this month of training, it's important to understand that the beginning foundations of to understand liquidity, or as it relates to buying and selling in the marketplace, our first fundamental understanding is that there's going to be liquidity above old highs and below old lows. When we understand that, we can see that there will be eventually targets that eventually target these same levels, moving price just above all previous highs, knocking out liquidity that will be resting just above those highs in the form of buy stops. Below old, the market will seek liquidity for the sell side or sell stops, taking his orders out. Understanding this premise, when you view price action, it removes all the retail-minded perspective, but heavily leaning understanding this premise, when you view price action, it removes all the retail-minded perspective that heavily leaning on indicators-based ideas. When you adapt these principles with the study of price action, it gives us the most truest, purest view of how price is delivered.